All right, in this lesson, we're going to go over kind of the overall business model, which will help us understand how auditors put together their audit and how do they audit different parts of the organization's structure. So to talk about this overview, let's talk a little bit about what businesses are doing and what management is doing. So in an organization, we always start with our management and board of directors. Now, if you've never taken intro to business, basically to understand what's going on is that the board of directors are typically owners of the organization or outside people of the organization that are put together in order to help move the direction of the organization for the shareholders. Now, it's the board of directors who are, again, part of the ownership of the organization who will then move the organization in the place where they need to hire these professional managers or management. So at the end of the day, when we hire a CFO or a CEO, we're really hiring as a board of directors professional managers who are skilled at managing an organization in their niche market, okay? And so we've got this management and we've got the board of directors that are working together. Now, at the end of the day, board of directors suggest and usually press upon management the business objectives and strategies of their organization, okay? Those business objectives and strategies are what makes that organization tick. What is the end goal? How do we get to that end goal? And what strategies are we going to implement to make that end goal? And usually the end goal, of course, is being the market leader, bringing in more revenues, bringing in more profits, bringing more so that we can distribute more to shareholders. Those are the types of objectives that we're trying to get to the end of the day. Now, once we've done that, once management has a clear idea of what the board of directors wants, management here is going to have to do some things in order to get their whole organization on the same page. Well, one of the ways that they get themselves on the same page is through different business processes, okay? So we have all of these business processes. Now, we're not going to go into the technical aspect of why they're important necessarily, but we're going to talk about it from the auditor's perspective. Now, when an auditor walks into an organization, the question that always comes to their head is, how do we audit this organization? And so what most auditors do is we separate into the 5 major processes of an organization. Those major processes include the finance process, the purchasing process, the human resource process, the inventory management process, and the revenue process. And what we're saying here is we could go through every line item of the organization, but let's audit the actual process from start to finish. If we audit the process from start to finish and we actually like what's going on after our testing, then we know that things are working effectively and efficiently, and we know that the numbers are coming out correctly. And so it kind of gives us a little bit of an easier idea of what's going on in the organization and auditing that organization. So the finance process, also, all that has to do is how do we acquire capital in order to run our business, okay? So do we issue stock? Do we issue bonds? Do we get loans from the business? So what's that process look like? How do we have controls in place to make that happen? So what's that process, that finance process? We also have the purchasing process. The purchasing process has everything to do with how do we acquire raw materials in our organization, okay? So how do we acquire those raw materials in our organization? What steps are needed to be done in order for the organization to purchase something from an outside vendor? Then we have our human resource process. One of the major parts of an organization usually is its people. And so you've got to hire the right people. It's often said that you've got to hire the right people in order to have an effective organization and create a good culture with that organization. So how do we hire? What's the steps in order to getting hired in the organization? And then once we get them into the organization, what are the steps of properly training them, which is very important to reduce fraud at the end of the day. And then we have our inventory management. So we talked about this purchasing. We're purchasing it. It's now in the organization. Now we have to manage it from an inventory standpoint. So there typically is an inventory management process. In that inventory management process, we also have a costing process. That costing process, again, helps us with making sure that we don't violate the matching principle of matching expenses to revenues that we are receiving. And then the last thing, obviously, is our revenue process. How do we collect revenues? How do we issue credit to customers? All of that, when it comes to revenue management, is in that revenue process. So from an auditor's standpoint, what we're trying to do at the end of the day is audit these different processes to help us understand the overall organization and what we're looking for in the financial statement. So when it comes to, let's say, the finance process, in that finance process, we're going to audit everything from the loans, the loan covenants. We're going to look at equity. How is equity coming in, and is equity being booked properly in the statement of owner's equity? So that's what we're looking there. If we jump over here to the revenue, we're looking at revenue recognitions. We're looking at time cutoff of revenues. We're also looking for bad debt expense there. Okay, so that's what we're looking for in these 5, and it helps us kind of categorize what these audits are. Now, at the end of the day, once that's done for a business standpoint, then we're going to look at performance measures and assessments. So we're going to look at the finance process. How effective are we at getting capital? How effective are we with our human resources, and what things do we need to do? For instance, a lot of airlines go through these huge contract negotiations. How well are we measuring our contract negotiations on the human resource process, and then the assessments? Are we getting to where we need to get to, or are we kind of just pushing off those contract talks until we can get a better contract at the end of the day? In addition, for us auditors, we get to the external financial reporting. So all of these processes kind of funnel through the financial reporting process, and in that financial reporting process, we issue external financial reports. Now, once a business does all of this, they have all of these processes in place, they have all of these assessment processes in place, they need to think about the risk. So management's job is also to figure out the risk assessments. What could go wrong in their business? And that's everything from someone slipping and falling, to what happens if a supplier no longer becomes our supplier, to a vendor who stops buying things from us, and how exposed are we with that one vendor. And so those are the risks that an organization has to think about throughout their business cycle, and then make contingencies based on those risks. So if we know that one of our vendors buys 30% of our product, which means if they go out of business, that's 30% of our revenues that we would get in a normal course of a year. We may need to diversify our organization, which means find other customers as well, so that we're not that exposed to that one customer, that one client. Okay? Same thing from the vendor standpoint. When we talk about purchasing, maybe we are solely on this one vendor who provides us everything. Well, we may have a good relationship, but if that vendor goes out of business, we go out of business. So how do we diversify that, or how do we make sure that doesn't happen at the end of the day? So those are risk assessments that management has to think. What could go wrong in the business, and then how do we fix that if that goes wrong? Okay? Do we buy insurance? Do we do this? Do we have capital for it? Do we save up $20 million just in case? What do we need to do? On the other side of the spectrum, we have corporate governance. This helps us with corporate governance because at the end of the day, remember that the board of directors is relying on management to do all of these things in order to make money for the organization and return profits to the shareholders. And so all of this provides this idea of corporate governance on making sure that people know what they're doing and know what the goals is at the end of the day. So that's a little bit about the business process and a little bit how auditing fits in to that business process and governance.